Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today the 10th of August we will continue to discuss our situation on the euro currency. And as usual we will focus on the daily time frame and intraday charts. Well, in fact currently is not particularly new that we could add to the discussion of the current situation that we have done during the yesterday's trading session and our weekly research. All that we could do is just to wait when the market will hit the neckline of this pattern. As in terms of the time frame that has been spent on the forming of the shoulders of this pattern, as in terms of the ratio that head stands from the shoulders, this pattern looks nice. Well, and currently you could see why I often recommend to have the position before the market will reach the neckline. If you will follow the classical approach to the trading of the head and shoulders that assumes that you have entered on the market, in the market when the market will break the neckline, this leads to some significant problems. First of all, currently you can see that the target from that ABC pattern, A, B, C bottom, stands precisely at the neckline. Also you can see that right on the neckline is the level of the daily overbought. It's 144.95. The target 144.75. Also around 144.45 area right here, the weekly pivot resistance 1 stands. So personally I do not want to enter along right at the strong area of resistance because it could lead to some retracement to the downside. And my preferable approach to trading of the head and shoulders pattern is to search for the buy signals around the right shoulder. Here it was the piercing in the cloud pattern right at 618 support from that swing. Okay, but this could be also the butterfly buy patterns on the intraday charts, some reversal patterns in that area that could form double bottoms or something. Okay, well, because entering at the top of the right shoulder gives you a lot of advantages. First of all, when the real doom and gloom will start around the neckline, you already will have the profitable position, and in fact you just can watch the movie and how it will be resolved by the market. Even more, when you enter right at the right shoulder, you could place the very tight stop, because if market really will continue to move to the downside, it will tell you early that probably this pattern will fail. So, but currently we see that all looks like everything in order. Market has bounced from the 618 support and now is forming the right shoulder of this pattern. And I think that if you have followed our analysis, you should have already long positions that already has some profit. Now let's take a look on the intraday charts because it also has some surprises. This is the 4-hour time frame, and this is the smaller head and shoulders that is forming currently on the 4-hour time frame. Well, in fact, it in this region of the daily time frame. What do we see? This is the neckline of this pattern. Take a look at this. A, B, C bottom. Market hit 618 target 143.45. 100% extension target stands right here, 144.79. It's very close to the daily 618 target 144.75. So it stands precisely at the neckline of the daily time frames right here. So this is another problem. If you have missed the entry right from that area, okay, and waiting for the breakout as a classical approach suggests, this target adds more resistance to that area. Now take a look at another pattern. This potential butterfly sale pattern that could lead to the retracement or maybe to the reversal, I don't know. And the 127 extension of that butterfly, this is left wing and right wing is now forming, stands at 144.65. It's also at the same area. This is the weekly pivot resistance 1, as we said, 144.45. So you can see that a lot of different targets and patterns a point on that area, on the areas around 145 where the neckline of the daily head and shoulders stands. It could lead to some bouncing during the first touch of the neckline on the daily time frame. It could lead to some retracement, or even it could lead even to the failing of the pattern. And now just imagine what will happen if you enter it, as a classical approach suggests, right from the neck, right from the neckline. It could lead to very significant losses. If this pattern will fail, market could lead neckline and just show some failing straight here. That's why it's much better to enter long from the somewhere, find some patterns around the right shoulder to enter long. Okay. The second pattern in that move is this one, smaller A, B, C, D. Market now has hit 100% extension and turns to some retracement to the downside. Look at this thrusting up move to the upside and suggests that market should continue at least to 144.13 to the neckline of this pattern. Okay, but now it has turned to some retracement, and if you still do not have long position, you have the chance to enter from that thrusting move to the upside, and I think that it could be successful. So this butterfly that we have discussed on the 4-hour time frame, this is hourly time frame. Okay, this is the same pattern, A, B, C, D. Now you can see that market hit 100% and turns to some retracement. The first support stands right here, 143.06, and I think that it's better to try to enter right from that area if market will show retracement to this level. Stop could be placed below the confluence support on the hourly time frame, 142.65, 142.80, or even below the weekly pivot point. It's right here. Well, theoretically, market should not show very deep retracement during the current move, because it's not at the bottom on the daily time frame, and market hasn't quite reached the daily target around 144.75 yet. So I think that if market will show some retracement, it should hold here, 143.06, or at least at that point 142.65, 142.80. I do not suggest that market should show currently deeper retracement, but as you know, on the market could happen everything. So if you already have the bullish position, maybe you could try to move your stops to the break even. Personally, my position has been opened at 142. Well, if your positions also has been opened somewhere around that area, I think that we could move our stops to the break-even point and just watch how market will behave around the breakout of the neckline on the daily time frame and on the 4-hour time frame. Well, if you still not have the position, well, probably you could try to enter, but this enter will have much more risk than enter around that area. Okay, because now market already has reached some targets. It stands very close to the neckline, but still probably I think that it could work. Okay, so as usual, the major advice: control your risk, and take as less risk as possible. So if you already have the position, probably you could move your stop to the break even. If not, even if you do not have the position currently, the stop, as you can see, will be very tight. It's around 35 pips, so it's not very very big loss will be if market will show some erasing of that pattern, because in current fundamental environment on the market, I couldn't exclude any scenario that could develop on the current market, because very current situation is very depend on different speaking of the authorities of central banks and politicians and other participants of the world economy. So anything could happen currently, but I think that still market could continue the further move to the upside.